good afternoon, ladies and gentlemen. Welcome to How to Navigate the Art Market. It's our third panel for the day. We hope for this panel to be an insightful discussion that will explore the dynamics of the art market from economic trends and legal considerations to insider perspectives on auction strategies and collecting with passion. This conversation will delve into how global economic shifts, regulatory changes, and cultural influences are constantly reshaping the art ecosystem. And a little introduction to our panel today. Professor Mukti Khaire is the Girish and Jaydev Reddy Professor of Practice at Cornell Tech and the Cornell S.C. Johnson College of Business. Mukti is an economic sociologist who studies the creation of new markets by pioneering entrepreneurs in creative and cultural industries, including art, fashion, film, music, and publishing. Karan Bhagat is the founder, MD, and CEO of 361. Karan, as a professional entrepreneur, set up the company in 2008. He is responsible for providing direction and leadership towards the achievement of the organization's strategic goals and objectives. Over the years, he has passionately built a thoughtful collection. Himanshu Sinha is a senior partner at Trilegal and heads its tax practice. He has more than 25 years of experience in direct and indirect tax matters, including international tax, transfer pricing, corporate tax, goods and services tax, and tax controversies. Minal Vazirani is a co-founder of Saffron Art and Art Mumbai. She has been a driving force behind Saffron Art's growth, leading efforts across strategy, business development, technology, and finance. She has been an avid art collector for nearly 3 decades and has curated and organized exhibitions of Indian art both in India and internationally. The panel will be moderated by Kabir Jhala, a journalist and editor who writes about art, the art industry, and South Asia. He is the art market editor of the art newspaper, the journal of record for the art world, overseeing its coverage of galleries, auctions, fairs, and trade developments. Drawing from current market dynamics and real world examples, we'll guide you through the complexities of the art market in practical, accessible terms. And before I welcome our panelists on stage, I would like to thank the Kiran Nadar Museum of Art for their support as a speaker series partner. Thank you. And may I request all of you on stage, please?
Thank you guys all for being here. Um, so, without further ado, it is a good time to be selling Indian art. The Indian art market has enjoyed its best year to date, and consumer confidence appears to be at an all-time high. In the past 10 months, dozens of the most famous and valuable Indian artists have had their records broken at auction, including M.F. Hussain, whose Gram Yatra sold for $13.7 million in March at Christie's, New York, becoming the most expensive Indian painting and the most expensive South Asian work of art made after the 12th century. Tayyab Mehta's record was broken for $7 million at Saffron Arts live sale in April. And in September, that same auction house broke Gaitonde's record, now at 7.6 million, in a sale that itself netted the highest ever total for a sale of modern and contemporary South Asian art anywhere in the world. I can go on with these lists of records, and although less visible than auction results, there are signs of growth in the primary market and in private sales too. Some of India's biggest galleries continue to expand their footprints while promising newcomers enter the scene. Good times indeed. But questions abound too. For how long can this bull run last? Is Indian art really as safe an asset as headline records might make it seem? Are all parts of the market being lifted? In this talk, we will be exploring some of the wider questions that face the Indian art market, as well as the practicalities of buying and selling art. So to answer my questions today, I have a very wonderful and esteemed panel that spans quite a bit of the industry, so we can get a lot of different perspectives and angles into their insight. So our panel's already been introduced. Minal, I'm going to start with you. I believe that you also have a presentation. Would you like to show it now?
Oh, it's here. I do have a slide, which I think might be a nice start to
Yeah,
sort of frame what we're talking about.
sure.
So if we can get that. Oh, wow. We're organized. Okay. Um, can we just pull up it's all it is a summary of the market and kind of what the trend has been. A total auction market. If you could just put the slide up, that would be great.
And Minal, before you present, maybe I'll, a little bit of context. 2025, it's a major year, not just because it's a record year for the Indian art market, but also it's the 25th year anniversary of saffron art. And I think if we're going to consider how far we've come, we have to look back as well. Yes, yeah, some applause there. It's a huge,
Very.
yeah, it's a huge achievement. And yeah, to understand where we are, we have to also really consider where we've come from. And a question I'm considering more and more is not whether the Indian art market is growing. That's demonstrably the case. There's no doubt about it. It's really, is the Indian art market maturing? And I think to answer that kind of question, we have to look at the dynamics of what has changed now versus, in the last 25 years, including the last time the Indian art market peaked. So, yeah, without further ado.
Oh, I can click it. Okay. Um, thank you for that. I do think it's important to understand where we've come from. To understand exactly how significant this moment in time is. I have to say, when I first started Saffron Art, I had to set up. I actually set up my company in the U.S. and California. Worst tax jurisdiction to do it, but anyway, set it up in California and in India. And the reason for that was we actually had to sort of rewrite the rules. We had to work. In fact, we worked with FedEx to change the way they did logistics out of India so that you could go online, buy a work of art, and it would get delivered without all of that hassle. It was a painful process. Um, there were two things about the market: the total size of the art market, the total size of the modern and contemporary global auction market was $2 million in 2000. Now, keep in mind, I wrote the Saffron Art business plan when I was at business school. So clearly, my professor at the time was like, "What? Why would you set up a business like this?" And when we did come to set it up, in 2000, you have to remember Google was not a verb yet. You couldn't Google things. It had just about kicked off. There was no information available. And we were trying to do this online simply because we couldn't afford to do it any other way. And it was the most cost effective and efficient way to reach the largest number of people, especially for those without access to art. And what Saffron Art set out to do was create transparency of pricing and access to works. So, just to kind of, give you an idea where we went from there. Oh, we'll come back to that. No, this is the whole presentation, guys, actually. I just need that one slide, if I may. Can you just take it to the market slide? I mean, the bar graph. While they're doing that, um, yeah, I mean, we'll run through where it was, but it began growing very, very quickly at that stage. I'm wondering if it might be better for me to hand off to Mukti, cold call, yes. Uh, to cold call Mukti, who is the business school professor who wrote when she was at Harvard, she wrote the case study on saffron art in 2005 and 6 and really looked at kind of the starting point of the market. So while they're pulling that up, maybe I'll
Sure.
hand off.
Well, Mukti, yeah, so for a bit of context, a lot of your research is into a variety of creative industries, and you really look at these industries as ecologies. So you're concerned with all parts of what makes an ecosystem work, what's necessary for an industry to grow. And yeah, I think that's also it's a good way to go into this because you saw saffron art building up this market during the last peak of the art market, which is around 2005, 2007, 8. It will be interesting for you to also speak about what's different this time around, what's developed in the last 25 years.
Sure. Thank you. What Minal just did to me is called a cold call, where I wasn't expecting to be asked a question right away, but here I am responding to this cold call. As Kabir and Minal mentioned, I started doing this work around the creation of a market for modern Indian art. There had always been a global market for Indian antiquities, Indian miniatures. To some extent, some of the early sort of representation is there's a Raja Ravi Verma around here in the fair. There was a market for that, but never one, not a stable one for modern Indian art. And the reason for that typically was that it was aesthetically undervalued. and generally seen as quote unquote derivative of Western art. And so once it's sort of aesthetically underappreciated, undervalued, there was no there wasn't significant economic value put upon it. And largely there was a primary art market that, as Minal said, wasn't necessary. Those prices are not made public. It happens sort of it's a private art market typically, whereas an auction house, whether online or not, tends to publish the prices as far as possible, and that creates a sense of understanding. But fundamentally, the thing we found in our research, looking at what Saffron Art did, and you can see how at around 2005, 2006, the art market shot up. If you looked even pre 2000, you would see really sparse sales, secondary market sales, one or two of modern Indian art. You wouldn't be able to actually fit that in this graph without going sort of parametric or something like that. And then you started to see this grow, largely because you started to see academic interest in understanding and appreciating the aesthetic value of modern Indian art, to call out that it wasn't necessarily derivative of Western art forms or art formats, but instead could be seen in a category of its own. And that was really important, because once you start to do that, you can create systems of evaluation, ways to understand what is good art, what it is trying to convey, what are the various schools of art. And you started to see then that as people understood modern Indian art aesthetically, you were more likely to see them appreciate it economically, and therefore see the prices which we would see in the modern Indian art. So, an ecosystem of commentators, so to speak, academics, including also, of course, some of the catalogs that Saffron Art put out, other ways in which information was generated in order to explain the value of that art to customers, was really important in creating economic value. So, entrepreneurs, really important, but entrepreneurs of a cultural kind, of the storytelling kind, of the kind that created a narrative of appreciation, also really important to this whole process.
I think it's a great point that we have to look at this in a more holistic sense than just buying and selling. It's about the tertiary players who may not have a financial stake, quote unquote, but actually are huge drivers of market growth, as your chart clearly shows. Minal, do you want to jump in at this point?
Sure, sure. So actually, we started in 2000, and that's the reason we track kind of this 25-year trajectory. And you see in the early years, the value stayed quite low. And to the point that both of you are making, what we began doing was taking curated exhibitions with catalogs, printed catalogs, out to the rest of the world. I think we were a little naive, because we went straight to New York. You know, I mean, we did a show in Hong Kong, I remember, in 2001, but we went straight to New York, the most sophisticated art market probably in the world, and had 20,000 square feet at the Met Pavilion. We put up an entire show, and it was incredible. What was even more incredible is that I think it was apparently the first curated exhibit of Indian art, of modern and contemporary Indian art, to have been exhibited outside India in 2001. I mean, that wasn't so long ago. So I think what it meant was we had to take the art out there. No one took us seriously in the beginning, as Mukti said. It was very hard to get that acceptance. And as we began doing that, as transparency built in the market, we see it sort of beginning to pay off around 2004. And then the point you were making, which I thought was really valid, is, when we look at that peak of, this is in US dollars. Maybe what I'm going to do is, just to make it easy, is I'm going to look at it. Let's look at it in Indian rupees. This is in crores. So we see a peak here that comes up, in 2006, 2007, 2008. So we go from about 20 crores to about 1,000 crores, and just above 1,000 crores within a span of 6 years. That's enormous. It's a hockey stick if you're ever going to see it, right? And we went from there to today, which is the point that Kabir is making, where we've gone from 1,000 crores now. Before the year has ended, we're at over 2,000 crores today in 2025 as we sit here now. So we've come a long way. There have been a lot of bumps in the road, but overall things have moved up. The reason I show it in Indian rupees as well is I'm just kind of taking out the fluctuation for the currency valuation.
Before I, address the other panelists, in terms of that question around maturity as someone who has deep insight into the buyers that are emerging onto the season and are continuing to collect, what sort of evidence can you give to demonstrate the fact that this is a more mature market than what was happening in, 10, 15 years ago?
I think that's a really important question. What was happening around, actually, I do that in the previous slide where you can kind of see that. Actually, let me show you that. Oh, it's not going back. But basically, around that time, there were several things that happened which caused a spike in the market. It was the first time that Indian art was being seen internationally, that it was being validated through existing art market structures. So there was a real push for it. The first time Indian art was shown in Basel was 2006 when Sam Keller was still the director. It was the first time you began seeing institutional shows, and there was all of a sudden this rush to put contemporary art out there. In fact, we did a really interesting study where we created an index of modern Indian, the top Indian modernists and the top Indian contemporary artists. And we found that for contemporary art, the price growth was about 7 times that of the modern artists. And there was just this surge of excitement about it. Oh, I've got to buy it because the prices are moving up. There were dealers that came in. Everyone came in and just decided to acquire works. And then when the financial crisis happened in 2008, and all of a sudden the market was teetering, um, all of the dealers or the consultants or advisors who had acquired contemporary art for clients around the world just sold. It was a mad rush to sell, and there wasn't enough of an installed base to create the maturity that you're talking about. There weren't enough of these third parties that Mukti's referring to validate different movements, different genres, and all of that. But I think a lot of that has changed because as we look today, we have KNMA, that has been, doing incredible shows. That's collaborated around the world with the Barbican, with MoMA, with the Met, it happened on so many different fronts. They're setting up the largest privately owned museum in the world. So I think we're in a very different place in terms of that part of the ecosystem.
I think if we're looking at this chart, so not only is it about these more obvious market players who are resulting the growth of the Indian art market, but it's also people working more behind the scenes. Himanshu, as someone who is a legal advisor to art businesses, you are privy to a lot of the behind the scenes activity that's going place in terms of lobbying, in terms of legislative change. I was wondering if you could speak a little bit about some of the recent changes that have come up. Obviously, many of you will have heard about the GST decrease from 12% to 5%. So it would be great to hear a little bit about, firstly, how that came about. Minal, I know you are also very involved in lobbying for that, but then also some of the lesser known changes that are happening to the business.
Yes. So before I respond to your query and dwell on the tax policy landscape in India and how it has evolved in the recent times to the advantage of the art sector, I also want to pick on this chart which talks about how the prices crashed after the great financial crisis. In India, the art sector has been a victim of a lot of frictions in the regulatory space and the tax space, and one of the regulatory problems in the art sector was lack of clarity of the treatment of art funds. Some of you may be aware that in the 2000s, a fund was set up. It was a pioneering fund, an art fund, in which around 650 investors put in money in that art fund. And the regulators, the SEBI, came up with an objection and said that money cannot be raised in this fashion without obtaining a license from the government. And that really caused a huge amount of confusion in the market. The fund crashed, and the government ordered the money to be returned along with 10% interest to the 600 odd investors. So that really created a lot of uncertainty in the art market, and the overhang of the same lasted for a few years. So that is the period where you see here when the art market as a whole has fallen. But now currently the market has matured. You asked that question, and one signs of maturity of the art market is the diminishing of the volatility of the art prices. So we now have an art price index, which is run by the IM Ahmedabad group of people, where they track 50 or top artists. And if you look at the chart, the index, you'll find stability in prices. So that is an indication of how the art market in India has matured, and that gives comfort to art investors. And one last point before I go on to tax is the headway and the runway that is available to the art sector in India. Just to give you in perspective, in the US, the art market as a proportion of the stock market is around 1%, one maybe slightly more than that. So the stock market is 60 trillion, slightly overvalued right now because of the tech bubble, and the art market is around $500 million. Sorry, $500 billion. Now, in India, if you look at the comparative figures, the size of the art market, which is indicated here as a proportion of our stock market, it is 15,000 times less. Okay. So we're talking of 100 times 1% there in the US and 15,000 times less in India. So that's the headway and the runway that's available for the art sector to grow. And therefore, as an investment class, I feel art has a great future in terms of growth, how it can grow. Because one of the key factors for any asset class to be a sustainable asset class is to have a market size which gives enough liquidity to the participants, whether it's the buyers or the auction houses or the art galleries.
Which is always a key issue, right, in terms of considering art as an asset class, because it's not as easy as to say that you can just sell your work
That's right.
when you want to. You have to have a buyer who wants that work. And it's these stocks, well, they're not like stocks in that they're not interchangeable, right? Each work of art is unique and it needs to have someone who wants to pay a price for it.
That's right. And if you have a sufficient number of auction houses like Saffron Art or Sotheby's and Christie's who have an annual fixed calendar of auctioning artworks, then the buyer or the seller is aware and knows that he has a platform in a fixed timeline to buy or sell. That gives a lot of comfort and removes uncertainty around liquidity. Now, coming to tax, several important changes have happened, which are largely positive. As you pointed out, uh, GST on artwork was 12%. Now that has been brought down to 5%, and which is a very significant reduction. And it opens doors for new buyers to get into the art market, and also for existing buyers to significantly reduce their the price burden in terms of ability to buy. And this has a spin-off effect in custom duty as well, because when you import artworks, you have to pay a basic custom duties of 10%, and then an amount equivalent to the GST is added on to that. So that was earlier 12, and it has been brought down to 5. So as a result of which, even import of artwork has become less expensive, and there's an advantage of 7% to be obtained when you're importing artworks. Then there are other changes on the policy landscape on TDS. Some of you may have heard that you have to deduct tax at source when sale and purchase of artworks are made. Now, the rule in India was changed a few years ago. So if you have a turnover of more than 10 crores, then you ought to deduct tax of 0.1%. And there is a corresponding provision which is called tax collection at source. So a seller collects tax from the buyer by adding 1% on any artwork that costs more than 10 lakhs. So these are frictions which have been introduced in our system and unique to India, and create friction for the art buyers. But these are new developments which an art buyer or an art stakeholder should be aware of. These are broadly the new changes that have come about.
I'm glad we brought up this notion of art as an asset class. So now on to Karan. Karan, you're wearing two hats on our panel. You, as our introduction informed us, you are an asset manager. You run one of India's leading asset management firms. I think you have something over $40 billion you manage for some of India's wealthiest families. You are also a collector as well. So you really are on both sides. I wonder first, as in your day job, are you advising people to invest into art? Is that something that you're advising your clients to add into their portfolios?
Oh, thank you, Kabir. I think just sorry to correct you. It's 80 billion, but not it's not
80,
yeah,
not 40.
no, that apart, I think no. Let me start off by saying very, very clearly, art's not a regulated asset class, so we're not allowed to advise on art at all. From a regulation perspective, we can only deal in financial instruments and security. So unless and until art becomes a security, regulated firms like us will never be able to advise on art. Okay, so that's the first point. I want to make it absolutely clear. So that's my day job, and on my day job, I'm not allowed to invest in or advise in art at all. I think, and from a regulatory perspective, I know Himanshu spoke about it. I think firms like us will be able to view it as an asset class or potentially something only if it becomes a security. And for security, obviously, it's a long, long way to go because I think two or three things would be needed. One, obviously, it has to achieve a certain degree of standardization. Like you correctly pointed out, there has to be a much more scientific way of measuring value, okay, as compared to a fairly dispersed way today. Second, I think it has to be held in electronic format, so it has to be ideally, you have to have some way to kind of electronically dematerialize the piece because if there has to be advisory, there cannot be any settlement failure. So there has to be an ability to be able to buy and sell without any settlement failures. And thirdly, I think from a regulatory perspective, absolutely right not to allow art funds at that point in time. So I think from we have to give credit to the regulator in that sense. I think there will be a time when art will be able to become an asset class, but whether we are there yet or not, I think is not really for me to judge yet.
Then maybe I'll rephrase the question. I obviously appreciate that on an official level, you can't advise the acquisition of art into your portfolio. Nonetheless, you are also privy to a lot of.
Yeah, I was coming to that. Yeah.
Are you noticing an increase in people investing?
No, I think in that sense, I think I'm a very young collector, so I should not sound like an expert. So let me kind of put that out. But having said that, I think I see a lot of similarities, right? Just as somebody on the other side of the table. I think end of the day, like every other asset class, art has an element of demand and supply. And supply is obviously, in some senses, you've got the moderns and the contemporaries. The overall quality of contemporaries, the number of artists interested in kind of pursuing it as a profession, creativity, the wide dispersion in geographies, the wide dispersion in mediums of art, all of that's increasing, and therefore the adoption of galleries, number of people, a number of great galleries which have got set up in the country. So all of that's kind of leading to its own expansion on the contemporary side. Purchasing power parity obviously is increasing. Number of homes are increasing. Real estate. So obviously there's a much deeper interest as well as aptitude to kind of purchase art, whether it's only for investments or for something for us to see and enjoy as we go along. That's for time to tell. But I think people definitely enjoying the contemporary art market. The modern art market, on the other side, obviously supply is finite. Okay, and obviously for the same set of reasons, demand is increasing, and that obviously is kind of in a certain way reflected in the movement of prices over the last potentially 3 to 4 years. Part of it is obviously demand. Part of it is the fact that supply is finite. So I think, like any other market, demand and supply have a role to play in finally determining the price. And you will have time periods like 2008 to 13 where kind of prices correct. It's not as if prices will never correct. When supply kind of outstrips demand, price will also correct. And it will be driven by factors outside all of our control. And secondly, I think obviously, like in every other asset class, things which are of higher quality typically correct lesser than something else. So obviously, as we feel the prices have kind of maybe potentially picked up a bit, all of us, as collectors, will have to be slightly more careful if we want liquidity to invest in things which potentially can be slightly more, because as if things do kind of correct, things which are slightly better quality are likely to have more liquidity. So I think those are some of the aspects, and and lastly, I think while as a collector hat, I would kind of like to believe it's what you like first, followed by the asset class, followed by the investment, followed by the returns.
Do you, I mean, they can all go together as one thing, as one decision. Do you work with an advisor or with someone who, yeah,
I-
helps guide your
I am blessed to have lots of friends whom I can call and check with
free advisors?
free advice. But to be honest, I think it's impossible, and I personally don't feel uh, confident enough. I feel passionate enough. I don't feel confident enough to say I'm investing in art. Okay, so I am passionate enough to buy art as a collector. Am I confident enough to invest in art? Maybe no.
It's interesting. I mean, I think that topic of art as an investment is one that is very charged. I mean, you only have to look at that graph here to sort of see what a large or too large amount of speculation can do to a market when things turn. However, I also do speculation to an extent is also important in a market. People have to believe that they are investing into something and that thing is going to grow. Otherwise, no one's going to buy. Minal, as someone who is so involved in this market, how do you sort of balance this notion of art as an asset and people considering it as an investment, especially, and it's important to contextualize where India sits into the world context. This market is less than 1% of the global pie. Right now, as many of you also will have read in the global market, it is taking a dip, mainly because extremely expensive works in the $50 to $100 million range are not being traded at the moment. That being said, it's really brought into question this notion of art as an asset class. Art is now underperforming against the S&P, vastly underperforming against gold when you're talking about the whole, the more Western-led and China-led part of the picture. So clearly this logic also has a ceiling. How do you sort of balance all of that? And then Mukti, will maybe move on to you as well, your thoughts.
So, I mean, I think, I tend to subscribe actually to Karan's way of looking at it because I don't see art ever being a regulated asset class. And I think the reason for that is we will not be in a situation to have it can never be commoditized. So it's never going to be traded on an index. It's never going to have a liquid market. These are individual pieces. I mean, can it be tokenized? Can you do part share that's traded? There have been a lot of different models that have been tried out, but at a very small scale. I think there's the other side to art, which is the joy. And that is invaluable. I mean, if you it- I'm just let's just look at the math of art. I mean, I'm oversimplifying, so please excuse me for that. But you have a canvas, about $100. You have paints, lets you go wild and buy some Winsor and Newton, get some great, $500. Um, you have paintbrushes, whatever. You get to about $800-900. Maybe you get to $1,000 worth of materials. Put in, 4 weeks of time, maybe some secret magic of the artist's hand. And if you kind of put that together, if you happen to be Cezanne, in 2011, that work would have sold for $250 million, right? What is it that goes into creating that kind? It is very much a price versus value discussion. Then what is it that goes into creating that value? And that's not a science. I mean, in the same year in 2011, if I can just pick out an actual, not an actual, that's the wrong word, pick out a different asset class, there was an oil rig sold off the coast of Burma for $250 million. So, and that obviously gives you a forward paying cash flow that, has a different value. So I think we have to value art very differently. And there's an intangible to it that's very difficult to put into these boxes.
Please,
Can I just
of course.
the way academics put it, and I'll just give you a shorthand to do this, is that the way academics put it is that a lot of art or other cultural goods have far higher symbolic value than the actual material value. So the art, the canvas, paints, etc., has some price, but the value is much more about the symbolism, what it means for people, what it means in that context of society, and all of that. And that is what the value gets captured at, not the material aspects of it. Sorry.
I just wanted to narrate an interesting story about Mona Lisa, the famous painting everyone's heard of. So the painting was made by Da Vinci over a period of 16 years. It was commissioned by a Florentine merchant for his wife, and it was never given to the person who commissioned it for the reason that Da Vinci had to move from Italy to France. He was commissioned by the King of France to come over to Amois, a small village, and act as the art advisor, art and architecture advisor to the king. So after 16 years, the painting was sold to the French king for 4,000 ducats, which could buy 14 kilograms of gold in early 16th century. Okay. Now the value of gold, of 14 kilograms of gold in 16th century, in today's terms, would be $500,000 at that time. Okay. Now, if you were to invest $500,000 in an say it's a hypothetical stock market, a US stock market which has a history of 200 years, which gives you an average dollar returns of 10%, it would be trillions and trillions of dollars. Okay. But currently, Mona Lisa is valued at $1 to $2 billion, even though it can't be sold under French law because it's a national treasure. So, therefore, when we talk of a return on investment in art, it is an inappropriate comparison because art, best art can never beat best equity in financial terms. Okay. Best art can beat average equity. Okay. Like Hussein over the last 4 or 5 years can beat its CAGR of 13%. It can beat 10% stock market return. Okay. But Hussein or Da Vinci cannot beat the best in the equity market. Let's say an Infosys over a period of 30 years, 50 years. So therefore, if you're looking only for returns, then art is definitely not the right port of call. Art is a unique combination of investment and passion and emotional and aesthetic engagement. Okay. And if you add value to emotional and aesthetic engagement, that's where uh, art outscores others, and it also offers something among the financial assets which others don't have, and that is arbitrage opportunities. In finance, arbitrage is very difficult to find. So if you buy a stock, national stock exchange for 100 rupees, you may buy it for 99 or maybe 99.50 on the Bombay Stock Exchange. There's a 50 paisa arbitrage. But in art, if you understand art, you can buy art for $100, which can become $1 million because you understand art and the aesthetics of art. So that's an unique aspect as far as investing is concerned for art as an asset class. So that's the thing I want to share. And one last thing about art as an asset class is that in equity, you would sell at the very first instance of a stock market panic. But art is not sold like that. Art you would hold for generations. And that gives tremendous amount of benefit to an investor. The famous fund manager Peter Lynch said that the most successful investors are dead investors or investors who buy stocks and mutual funds and forget about it. So, forgetful investors and dead investors outperform a normal investor because they just leave the investment for a long, long period of time and allow the asset to compound. And that's what happens in art, that you don't sell because the price has fallen or price has gone up. You just let it hang on your wall because you enjoy it. And that's where these are the two key distinctions I thought I must bring out to this audience.
Actually, can I respond to that really quickly? And then so if I want to respond to that because in 2008, one of the things that happened aside from the externalities of the financial crisis, and in Mumbai we actually had the terror attacks that December. So it was a very difficult time. Um, but following that, just to give you a specific example and a more general one, we had a work of Subodh Gupta that sold in June of 2008 at the peak of the market for about $1.5 million, sold to a European collector. Another work from the same series, same size, after this crash, we sold in February of 2009, and that sold at $250,000. And what happened around that time was, as I mentioned, all of these dealers, anyone who had contemporary art, went out and sold. And in fact, it was, and the reason I bring it up in response to that is we have to reinvent when those things happen. And at that point, we had galleries as an auction house. We had galleries coming to us and saying, "Look, I haven't sold a single work of art in 3 months. I'm not able to pay salaries. Here's my stock. Sell it for whatever you get." It was very difficult to figure out what the pricing should be. And that's when we came up with the no reserve auction. And there had never been entire no reserve sales of art. And we put it out there for the market to decide and find its own level. We did, and there was a great deal of volatility because we did have people that sort of dumped on the market the way you would have stocks dumped on the market.
Would you say the prices that we're seeing today, at least in the contemporary market, like that's where they found their new grounding right now? For example, I mean, you sold a Subodh, I think, last year for around the same amount of money as 250. Comparable work is on Nature Mort stand right now, being offered for a little bit more, but obviously, I guess you can get a discount to some extent in the primary market. Do you think that that's sort of where you established prices again in a way that made more sense for this market?
I mean, I think what it did was establish the price at that moment, and I think it's changed over time. So, if something is hovering around that price, that's what the market has chosen to set it at. However, if you look, for example, at Subodh's sculptural work or his installations, those have gone up dramatically in price. So, I think it depends on the individual work.
Right. I think we've done a great job in terms of looking at the last 25 years and where we are right now. I want all my panelists sort of look into their crystal balls a little bit, and we have to look into the next 25 years, or at least the next 5 years, and ask ourselves where this is all going. Karan, I want to start with you. So I read the Architectural Digest feature, which you discuss your collection. Are you going to continue collecting at that sort of pace? Would you ever consider sort of doing something in a more public-facing model? I'm wondering where your trajectory as a collector goes from here.
To be honest, I think it's in a very, very clear descending order to me. For me, the first thing is obviously passion, interest. And I'm also going to call it passion and interest, because passion is what I like. Interest is because I really like to read, and I'm kind of consuming a lot of material. So that's something which is really kind of ingrained to me. From an investment perspective, I'm looking at it as um, pretty much part of it's like my real estate investment. Okay, I'm not doing it for appreciation. I don't really count it as part of my assets. Obviously, real estate has got a rental aspect to it. I think art has got no rental, but the rental is really the fact that I get up every day and look at it, and as Minal said, it gives me joy, right? So I think the rental element of art is joy. I think what comes along with it, okay, over the next 5, 10, 15, 25 years, I honestly have still not got down to a point of thinking about it. But having said that, you don't want to make dramatic mistakes, okay? So you don't want to buy something for 10 rupees, okay, which is worth, let's say, 2 rupees, or going to be potentially worth 2 rupees. You don't want to make those mistakes, because if you make those mistakes, the passion and the interest go away, okay? So it's while you don't do something to earn a return out of, you still need to be careful not to make dramatic mistakes, because what mistakes do, big mistakes, they take the passion and interest out of it. So therefore, you need to have a bunch of people around you who can stop you from making mistakes. So while I'm building out my collection, I'm hoping to do 3 things. I'm hoping for it to be a passionate collection, things which kind of give me joy in the morning. Second, like for the rest of me, I love to read, and I'm hoping to consume and learn more about whatever I'm doing. And third, uh, you know, I don't want to have a trophy collection or have the best collection or do some great investments. I'm not looking for any of that. I'm just looking for saying, don't make big mistakes. Okay, and I think that keeps my interest alive and keeps my joy alive.
Mukti, you've not only just studied the art industry, you studied many other creative industries as well. And, in your understanding of, I mean, obviously, as we've established, the art market, South Asia or not, is incredibly idiosyncratic as well. Nonetheless, you can surely also draw some parallels as to where the South Asian art market is right now. Do you, from your understanding of other creative industries and how they grow, is there anything that you can sort of extrapolate to where the South Asian market is right now and where it might be going?
Sure. Not necessarily in monetary terms, but I'm going to pick up on what Karan said about reading and talk and allow me to digress a little bit. If anybody in this room reads, and I'm looking at you, Karan, but I'm sure others do, you all have had your tastes about what to read developed all the way from school. And maybe it is antipathy. Maybe because you were made to read something in school, you hate that kind of work and you want to read something completely different, or that's exactly what you want to read. You had a great English teacher or language teacher, and that's what happened. Uh, and that's how we developed our taste. That's how we know where to look for the kinds of books we want to read. And then we of course get our other inputs from these third parties that I mentioned, book reviewers, other people that we respect who tell us this is a great book, you should read it, and so forth. And I want to talk about it as in talking about the future of the art market here or anywhere. I think developing those tastes, because again, you want to buy art, even if you're thinking of it as an asset class, you still want to buy art that gives you joy. And that should still be the primary way to look at art, because truly, if you really want to think of it as an asset class, it is something you want to allow to marinate. You bought something in the primary market, you want to you everybody, including the artist, the primary market seller, wants that art's value to marinate a little. People need to get used to it. People need to get used to that style, understand its importance, value, before you, if you wanted to make a return, before you bring it to the secondary market to sell. And so I think the future of the market really depends on all of us, everybody, not just the people who want to be collectors, not just the people who want to have the means to collect, but on everybody having a point of view about what is good art. And that can only come through continuous exposure, through reading more about art, various forms of art, developing tastes, building our preferences and likes and dislikes, and then maybe starting small, but that's sort of where it'll go. You'll need the full range of primary sellers in multiple niches, not just people going after the big names or the people that they think are going to be big names, but really cultivating artists, new artists, people working in different media, different kinds of work. And so that all of that comes to the market. Then we all have an understanding of it. We all have a sense of preference, taste, and then we need the players. I'm looking at you just because you're one of the third parties that writes about it, and for us to all sort of go to institutions, get exposure, and learn. I think really it's about learning, knowing about it, and that's going to drive the future. The less we learn, the more we use it as a, like real estate, to maybe flip in order to get value, and then you run into a speculative bubble because that aesthetic value hasn't increased. I teach at Cornell Tech, where I worked with a computer science professor to write a primer on NFTs and the art market. Remember NFTs one time? They were huge, huge amounts of value. And the main reason they sort of went nowhere after a point of time was that nobody took the time to aesthetically create a sense of understanding of the NFTs. They just went up in price. So the economic value went up way before the aesthetic value was even established. And so you got all these speculative bubbles and then it went down. So without that understanding, I think the future depends on that understanding. Without that understanding, you're going to get more and more bubbles rather than a stable market that knows what it wants, so to
I
speak.
think that's a great point. I think increasing heterogeneity of the market is something that I'm always looking out for. I think one of the strongest parts of Art Mumbai this year is actually the presence of folk art and tribal art. Adivasi art is really hitting a sort of a new stride. You have things like the Mitchell Crites collection. Ojas has been doing great work. That's a good example of something that is entirely removed from the modern and the contemporary art market, but has seen tremendous growth in the last couple of years because, as you say, there's been this increasing amount of literature exhibitions, people, finally appreciating something that takes time to develop as a language. Minal, without treading too much off the same ground that Mukti covered, in a couple of sentences, do you have an idea of where this market is going, where you would like to see it go?
Well, I think we've had some really interesting conversations earlier in the day, and so I mean I agree very much with what they're saying, and just to extend that a little bit, though, I will say some of the numbers that we discussed earlier. I think we have to look at India, South Asian, and the overall Manasa region, and the fact is it's growing, or has grown actually 4 times faster than Europe. That's a big number. We've in India, I think South Asia actually, the subcontinent has grown 20 times faster than the UK. We're the fourth largest market in the world. I mean, those are significant numbers, and I think that momentum is just picking up. So actually, today a lot of the conversations have been about the fact that the center of gravity is shifting to this part of the world. As you said, we're a tiny part of the global art market, but also, as you said, that means we've got a lot of headroom. And what I do see happening is I do see the market expanding. I do see values moving up across the board for good quality art, as we talked about. Um, I think there are more galleries, there are more touch points for art. Multiple fairs. There's a great deal more scholarship. I mean, we talked this morning about the fact that KNMA is building collaborations with museums and institutions around the world. And someone was saying, everywhere I go, I see KNMA. And I think what needs to happen is it's not just that everywhere you begin seeing Indian art or South Asian art around the world. I think what will really create the shift is when the rest of the world is looking to us instead of us looking outward. And I think that process is beginning. I think things are coming up on a slightly more level playing field as far as third parties go, and the market will catch up, which I think, to your earlier point, makes for a much more foundationally driven, mature market growth.
It's interesting. I mean, you talk about the market catching up. I would actually posit that it's the other way around. I mean, so much of this, what's driven Indian art in the last 25 years is private actors. And if anything, I mean, if you were talking about the Manasa region, India is a good example to compare to someone like Abu Dhabi or Qatar, in which actually the infrastructure is far greater than the market. We have a huge
Absolutely.
domestic base, but our infrastructure is comparatively very small. So do you think that inevitably is going to sort of limit market growth until we have, 2 or 3 more KNMAs on the subcontinent? Is there inevitably a ceiling, or do you see the market being able to sustain some sort of trajectory without amazing museums?
Yeah, I think we cannot get anywhere unless we have museums and institutions, unless there is that growth. And Ashish Dhawan spoke about earlier in the earlier panel about this new PPP model, the private public private partnership model, which is growing, I think. But I would say that's growing, it's moving along. Is it where it needs to be? No. I mean, we still have I don't even know what the museum is called, but the North and South Block Museum that the government is creating in Delhi. I'm sorry, the name's not coming
Yugi
to me.
Yugi in Bharat's museum.
Yes.
Yeah.
Um, but I think, it's enormous. It's going to be the largest government museum in the world. But what is it going to contain? Right? And this is what we were talking about earlier. What is the art that goes in there? What is the scholarship around it? What is that structure going to be? It's all happening on that side of it. The market is still small. I think the market still has to catch up as these areas grow, and I do see that happening. How quickly it'll happen or when, it's hard to say.
Yeah, I mean, we don't have enough time to go into this, but I would love to have a further discussion about the state versus private museum initiatives, because I think there needs to be more joining up of the two if, yeah, we're going to see real growth. Himanshu, lastly to you, in terms of future business developments, legal changes that you either expect to come, because they're in the works, or that you would think are the most vital for the market and the industry to grow,
I think the sheer size and momentum in the Indian art market is so powerful that despite the government roadblocks, the market will continue to grow. This is my understanding. And one of the key things is the energy and momentum you see among the youngsters, and the increased attention and involvement of the greater number of people in art is very much visible, whether in financial terms, in terms of more people buying art, or more people visiting interesting institutions, museums, etc., and more museums opening up. So I want to end with a very inspiring story of a couple who lived in the 50s and 60s in New York. They were called the Vogels. The Dorothy Vogel and Herbert Vogel. They were legendary art collectors. They were ordinary folks. One of them was a librarian in New York, and the other one was a clerk in the postal department. And they started collecting art from their modest salaries. And when they passed away, they had a collection of 4,000 unique artworks of minimalist and conceptualist art, which they left for the benefit of the public. And each state, each of the 50 states in America, has artworks from their collection. That's the great contribution. They were not rich people, they were not kings and emperors, they were not Medicis, but they were ordinary folks who, by the sheer passion and love of art, contributed so much. And I think we will find our own Vogels in India, in the manner in which our market is and our art landscape is evolving. So I'm very optimistic.
I love that. It's a good way to end. Hopefully, some of the Bogles are in this room with us right now or wandering around the fair today. I'd like to thank my panelists so much, Himanshu, Minal, Mukti, Karan. Yeah, thank you so much. Do we have time for questions? Is that, pardon? Yeah, we'll do questions off the stage. So if you have any questions for our panelists, do come up to us as we're leaving. Thank you so much.
There's just one question that I have, and I was looking at that chart. In 2008, it said $1,005 INR, if I remember right. Today, we are talking about doubling that figure. So we are talking, say, in 15 years with a dollar rate of, say, 46.92, which I just Googled. Today, we are talking about 89 point. How do you read that? Is it maybe a Kalat who contributed to a certain amount? And also, since we have been leveraging art in terms of valuation with, say, gold, the dollar is a very strong indication, especially for us in India. So, how do we kind of figure that out? How do we demystify it, considering there's no regulation, yes. But if you have a quote, income and asset affidavit statement, art is mentioned. How you evaluate it is another question, but it is under a regulatory body like a court.
I'm sorry, I'm a little unclear what the question is.
Let me
Yeah,
respond to that.
yeah.
So I think you are skeptical about the rate of return on investment in art. This okay, okay. So we agree with that. That if you look for absolute return, compare the returns on art with equity. Obviously, there's no comparison because the markets are so dissimilar. Markets are shallow. We are talking of trends. So if you look at the trend, there's secular trend of growth. That's what Minal is trying to emphasize. That if you are an investor getting into the art market for emotional reasons or otherwise, then you can draw comfort from the fact that there's momentum in the market and your investment is not at risk, which arises on account of lack of liquidity, lack of market space, and all that.
Okay, I thank you for clarifying. But if you were looking at, I mean, this is a trend, as he said, but if you're looking at a specific work, if I bought a work of Tayyab Mehta for $36,000, which I have a client who did that in 2001, would that be worth over 30 crores today? Yes. So when you look, it might even be over 50 crores. So we've got, there is a fair bit of volatility actually when we look at that. So I think it's very different to make that decision about a specific work or investing in a particular work of art or looking at an overall trend. There was a fund that I was involved with early on where, and it was in the early years. So, started the fund, it was a small amount, but, within 2 years, we returned the fund with an 80% net IRR. So if you want to measure it in those numbers, can you do it? Yes. Was it a great return for folks? Yes. I mean, 80% net IRR in 2.5 years is nice. So, yeah.
Thank you.
Thank you.